joining us now to discuss what we can expect for the single currency over the next couple of weeks. Thanos Papasavvas, Head of Currency Management at Investec. Good morning to you.
Morning.
You remain negative on the euro, don't you?
We do. We remain negative on the euro, not necessarily and only because of Greece, but because predominantly of the fiscal austerity around the southern European countries, which will cause significant headwinds for any euro recovery. Euroland is lagging behind the US. The Fed will be tightening much sooner than the ECB, and this will all lead to further euro pressures lower.
Were you not encouraged, Thanos, by this 45 billion euro aid program?
Even if this does clear through, and we do see some clear strategies coming through in terms of policies, which will be beneficial and positive for Greece, that will not necessarily improve the overall fiscal program of the Eurozone. So we will require tough measures to continue over the next year or two. It will mean that the ECB will not be raising interest rates anytime this year, probably delaying it until next year, maybe even the second half of next year. So the interest rate differential between the euro and the dollar, the economic divergence between the euro and the dollar will continue. So it's not a Greek issue, it's more of a Eurozone issue.
So, I mean, I've been looking at this IMF document, and you can get an idea of how tough the conditions are going to be that they would impose if they put the loans in place. That's going to obviously depress the Greek economy. What about other countries that also need to be, we're going to have a depressed southern part of Europe. How's that going to affect the northern part of Europe and the entire European economy?
Well, one of the debates is that what we're also doing on the one side in the southern European states, where we have got introduced fiscal austerity packages, we should also try to rebalance some of that with the northern European countries trying to spend a little bit more. So there has to be some sort of a compromise from both areas for this to work. But we do expect the Euroland economic figures to surprise on the downside.
Your stance on currencies on the favourable side, Thanos, seems to look towards emerging market economies. And of course, it was the week where we saw Singapore revalue its currency. We're waiting for China possibly to do the same. What's your view behind this sort of bullish emerging market currency outlook?
Well, we believe that there's further appreciation to be seen, both from the Asian region, also from the Latin American region. But within the Asian region, a number of currencies, such as the Malaysian ringgit, still, in our view, quite a lot of appreciation, Indonesian rupiah, Philippine peso, Korean won. The Chinese renminbi we believe, gradually be allowed to appreciate now that political pressure is off the Chinese, and that will not necessarily be the strongest currency. It'll be one of a group of currencies which will be doing well.
What about the concerns of the central banks seeing some of these Asian currencies that you mentioned, seeing their currencies appreciate? I mean, what can the central banks there do? Because, I mean, for them, yes, it's not necessarily great to see, and especially as those currencies are going up against the yuan.
I think that's a very, very valid point, and the answer, I guess, would be it's the speed rather than the direction. So as long as the appreciations are well maintained, gradual, and done slowly over time, it'll have less of a political or a policy concern. If we do see some more aggressive moves, then we would expect to see verbal or even physical intervention, as we had done earlier in the year.
Mm-hmm. China, when's it going to happen? That's the question. We've been talking about it all week. GDP, stellar numbers, inflation, the property market. It's been the week, hasn't it, where it's gained a real head of steam, this discussion. When's China going to revalue? What do you think?
And I think because the inflation data were a little bit better than expected, less cause to tighten monetary policy from interest rates, more likely to do it via currency. I think the meeting between China and US was relatively good at the top level earlier this week, and hopefully we will see some.
Is a one-off move preferable to a gradual appreciation? What's the cleverest way to go about it?
I think my preference or our belief is it would be more gradual, similar to the appreciation we saw in the 3 years prior to 2008. So a gradual revaluation over time.